All right, let's get into the uncomfortable question. Are your fees actually profitable, or are you just hoping they are? Most firms set prices in one of three ways. 1, what other firms charge. 2, what feels fair. Or 3, whatever they picked 3 years ago and never revisited. Today, I'm going to show you a simple way to sanity check your pricing using your P&L so you can see in black and white if your fees are carrying the weight of your firm or quietly starving it. We're going to do this in 3 steps. Number 1, pick one service area to analyze. Number 2, pull the real numbers from your books. And number 3, run a quick what if on your pricing structure. Let's go. Okay, step 1 is pick one service you offer. Don't try to fix your whole fee schedule at once. How to decide what to pick? The easiest is your most common matter type: divorce, estate planning, car accident case, etc. If you don't want to do that, pick the one thing that you secretly resent doing because it feels underpaid. Whatever you pick, write that at the top of the page that you're taking notes on. Take notes here because we're going to be doing some math. To give you an example, I'll choose something from my law firm. Yes, I own a law firm too. That's why I started Big Bird Accounting. We'll do a simple foundational estate plan and analyze those numbers. All right, step 2 is to figure out your gross profit. Here's how you do that. Go ahead and pull your year-to-date P&L and find 3 numbers. First, you want to find the average fee collected for the service that we are working on today. If you do flat fees like we do, you'll know exactly what that number is. If you don't, look back and divide up the money you collected, not billed, the money you collected, and divide that by the number of clients you helped with that service. That's going to give you your average fee collected. The second number we need to know is cost to deliver that service. The way you do that is this. First, add up the time it takes to complete the service and the people you need to pay to do those jobs. So if an attorney works on a matter for an average of 3 hours and you pay them $50 an hour, that would be $150. If a paralegal spends 5 hours at $30 an hour, that's also $150. Don't include people that answer the phones, don't include marketing people, don't include office manager in this number, but do be honest about how long it takes. If you have to chase people down with a bunch of emails, etc., then factor that in. We want to know how much it costs to actually do the work as accurately as we can get. The second thing you'll add into this is material costs, which for law firms is usually not much. For my estate planning example, it would be drafting software, maybe paper, not the whole monthly fee, but a fraction of it per case. Paper, maybe the binder if it's fancy. And those 2 numbers add up to have what we bookkeepers call cost of service. Once we know the cost of service, step 3 is going to be to calculate your gross profit. Okay, now that you have the average fee collected and you know how much work it takes, we can calculate one of the most important numbers in bookkeeping, gross profit. Said another way, gross profit is literally what you have left over after you actually perform the service. For our firms or for law firms, we like to see gross margins in the 65 to 70% range. Most law firm expenses get eaten up here because it takes manpower to perform a professional service like legal services. What's left over, you have to pay to run the business and then leave enough for yourself. If that gross margin is under 60%, you are likely underpriced or over-servicing that offer. Got it? Perfect. Now let's do some math via an example from my own firm. Let's say the average flat fee for a foundational estate plan at my firm is $1,750, $1,750. To complete the plan, it takes about 2.5 hours of attorney time at a cost of $60 an hour, and 3 hours of paralegal time at $20 an hour, and 1 hour of legal assistant time at $10 an hour. And supplies and subscriptions equal $50 per plan. Add that all up, and the total cost of service is $270. To calculate the gross profit, we take the total fee, or $1,750, and subtract the cost of service, or $270, to get a gross profit number of $1,480. Then we divide $1,480 by $1,750, and the result is, drum roll please, 84.5% profit margins. That's healthy. So now, not only do I think we're priced right, I know we are. But what if you got a number that you aren't happy with? There are a couple of options. Before we run through those options though, let's change the example a bit to give us one of these bad outcomes. Now, instead of charging $1,750, let's say we were charging $550. Now our gross profit drops to $280, making our profit margin a sickly 51%. How do we fix this? A couple of different options. Option number 1 is to adjust the price. Simply ask yourself, what price would I need to charge to hit, say, a 70% margin this month? And then do the math. If you keep the same $270 cost and want 70% margin, you just solve for price, okay? You want the profit to be 70% of the price, which means you want your cost of service to be 30% of the price. To back into the price, you just divide your costs. In our example, this is the $270 by the percentage that you want the cost to be, or 0.3. 30% expressed as a decimal is 0.3. And you come up with $900. Moving forward in this example, you'd want to charge $900 and suddenly the numbers start to make sense. Okay, what if that's not possible? That's fine. We're going to move on to option 2, fix the scope. If you don't think your market will bear that fee right now, and as an aside, you don't really know that until you test it out, so test it out. Then the question is, what can we remove from this service so the time cost matches what we're charging? Maybe you can do fewer revisions, email communication only, fewer quick questions between signing and final documents, or you can adjust the service level as well. You can make sure the attorneys are doing only attorney work, the paralegals are only doing paralegal work, and the legal assistants are actually doing as much as possible. We want to push the work down to sort of our lowest pay people if we can. To continue on with our example, to show you how to do this, if instead of the attorney doing 2.5 hours of work, they only do 1 hour, the paralegals, instead of doing 3 hours, they only do 1 hour, and the legal assistant does 4.5 hours instead of 1, the math changes significantly. Now your costs are only $125, making your gross profit $425 and your profit margin 77%. Sure, the quality of the work may drop, but in reality, at the price you're charging, that's what people are paying for. If you want more attorney time on a matter, you have to raise your price. The math doesn't lie. Okay, to recap, first, calculate your average fee for a matter. Second, calculate your hard costs, your cost of service to do the legal work. And third, calculate your gross profit margin to see if you're priced right. And if you aren't, you can raise the fee to match the reality of what you do or shrink what you do to match the fee. Right now, most struggling law firms I see choose option 3. They continue to over-deliver at their old prices and let their profit quietly disappear. If this is you, what can you do? Simply decide either we're going to raise this fee starting with new matters on, pick a date, or decide we're going to tighten the scope and stop doing X, Y, and Z for this fee. Write down whatever you decide to do so your team stops discounting by habit and stops saying that's just what we've always charged. And if you're listening to this and thinking, I have no idea how to even pull those numbers, that is exactly the work we do with firms. In our Trust in Books checkup, one of the first things we show you is where your fees are lying to you on your P&L and which services are secretly unprofitable. So run this for one service on your own, and if you want help doing it across your whole firm, we can do the math with you.
Mailbag.
Mail time. As always, these are real questions from real people. First up, Chris. My CPA always reminds me in November that I could buy equipment, furniture, or even a vehicle and get the write-off before year end. If I know I'm going to owe a lot, does it ever actually make sense to buy something just for the tax deduction? The answer is no. It never makes sense to buy something just for the tax deduction, okay? If you need a new vehicle, find a way to purchase it in the most tax efficient way. If you need new office supplies, if you need a new computer, a new desk, if you need anything related to your business, it's better to buy it before the end of the year because then you're going to get to expense it and write it off in the year that you buy it, okay? If you buy this new desk in January, then you don't actually get to see the tax savings from it until the next April, all right? So you do want to be conscious of what you're purchasing as the year end arrives and purchase those things that you need before the end of the year. You can even prepay rent. You can do other things like that to sort of front load those expenses. But remember, if you purchase a vehicle for $100,000 and you get to write the whole thing off, you're still going to pay upwards of $65,000 out of your pocket for that vehicle. So your tax break doesn't mean you're going to put money in your pocket necessarily. It's more like a discount on the things that you're buying. When you buy that new desk in December, you get to recognize that 35% discount right away when you file your taxes because it gets written off. So the short answer is don't just buy stuff to get the tax write-off. It's never worth it. Just go make some more money. All right. Question number 1 in the books. Mailbag number 2. How often should I actually be looking at my P&L? You talk a lot about using the P&L to make decisions, but let's be honest. How often should a small firm owner really be looking at it? Monthly, quarterly, every time I feel broke? Good question. Definitely not every time you feel broke, okay? You should be looking at it way before you feel broke. The P&L will tell you if you should feel broke, as a matter of fact. So my advice would be to look at it on a monthly basis. If you're not making a lot of money or you don't care that much, I would look at it at least on a quarterly basis. When you look at it on a monthly basis, here are the things that I would be looking for. How much money are we making? Okay. How much are our expenses? How much is our profit, right? What's left over? You want to have some left over. If your expenses are more than your revenue on a consistent basis, that means you are a brokey. You don't want to do that. You're going to need to adjust your pricing, or you're going to need to adjust your expenses, or maybe both, okay, and get profitable. The other thing that I like to look for on a month-to-month basis is a variance in expenses from this month to last month. What this can show you sometimes are vendors that accidentally charge you twice. It will let you know that your Google ads, for example, are out of control quickly, so you don't go months and months and months with some button turned off that you didn't know about, and now you're paying twice as much for Google ads as you thought you were. And other similar types of errors that can show up quickly, when you've been paying $500 a month for something and now it's $1,500 this month, to take a look at it and solve it. Okay, so I would probably look every month. You want to see how profitable are you. You want to track your revenue. Hopefully your revenue is trending up over time. Hopefully your profit is trending up over time. And hopefully you're just living a great life. All right. Question number 2 in the bag. Question number 3, Chris. I do mostly flat fee estate planning and basic business setups. Right now, my website just says call for pricing. Would you recommend posting my actual prices, a price range, or keeping everything off the site so we can sell the value on the call? So a couple of things here first. I'm taking off my bookkeeper hat for a minute. I'm putting my business owner hat on, and this is going to be super, super helpful because I've tried many of these different things in the past. Number 1, don't say call for pricing. All right. If you're doing estate planning, for example, I would put something like call to see how you can protect your family. All right. Give the value for them. Don't give the expense. You want them to call because there's value to be received from the call, not so that they can just find out the price. That's number 1. And that also leads into number 2, which is I would not put my prices on my website. Here's why. First of all, people don't know what they need when it comes to estate planning. For example, they don't know what they need. Do they need a trust? Do they just need a will? They don't really know. They're not experts at estate planning. So they need to have a conversation with you so that you can learn about their family, you can learn about what they're trying to do, and then you can give them good advice, good guidance on what the different options are, and they can pick. And going along with those options, obviously, will be the prices. The other reason that you want to have the opportunity to have a conversation first is so that you can demonstrate the value of the plan relative to the price that you are going to ask for. For example, when someone talks to you and they think about needing a guardian for their children, that makes the price of the estate plan seem a lot more manageable relative to having some numbskull raising their kids. Would you pay $1,500 to make sure that the right people are raising your kids? Most people would say, yeah, no brainer. Okay. Would you pay $1,500 to make sure that your kids don't blow their inheritance on, cocaine and strippers, something like that? Okay. Yes, you probably would. So having the conversation allows you to demonstrate the value of the service before you let them know what the investment is, not the price, what the investment is to get the service done. So I would not put it on your website. I wouldn't put a range. I would just say, look, I need to talk to you and learn about your family and your situation before I can quote you a price. And I would probably do this across all practice areas. Okay. We need to know what it is. We need to scope the work. We need to figure out what you need. And then we'll tell you how we get paid. Hope that helps. Question number 4. How do you think about discounts? I end up giving breaks to friends, to good clients, and people with sad stories. By the time I'm done discounting, my effective rate is way lower than my posted fees, but I feel guilty saying no. Okay, we've all fallen victim to the discount trap one way or another. I would only discount, though, for me, I made this decision consciously when it came to my law firm in particular, and I follow this rule exclusively. So when you are first starting out and you are doing basically all of the work, you can discount a little bit, because you want to get some reviews, you want to get some clients under your belt so you can get some word of mouth going. You want to get those things going. So getting people in the door to do the work that you need is helpful. When you don't have any people as well, and when you're doing all the work, all of that money really just goes right into your pocket. So that's also helpful. When we need cash, we offer a discount from time to time. Okay. As my law firm has grown, as Big Bird Accounting has grown, we do less and less discounts And it's only really if I'm feeling really nice or we really don't do discounts, honestly, real talk. We don't do them for friends and family. We don't do them for referrals. We just don't really do discounts. Here's the thing. Our fees are very competitive. We do a really, really great work. And so we want to be able to showcase that work and be paid accordingly. The ability to say no to discounts is sort of typically inverse to the busyness level that you're at and how long you've been in business. So that's how I feel about it. But here's the other thing. Don't feel guilty either way. If you're going to give a discount, just give it and go with it. If it becomes a regular practice, then it's not even a discount. It's just your fee schedule. So keep that in mind as well. But I am not in the habit of giving discounts unless I am asking for a specific review. I'm trying to build up clientele when I'm very, very first starting out, or I want to get just some cash in the bank and it's going right in my pocket anyway. Hope that helped. Welcome to Big Bird's Tax Corner, where small law firm owners learn how to legally pay less in taxes and actually keep more of what they earn. Today's topic, don't let taxes bully your pricing. A weird thing happens when I tell firm owners, you need to raise this fee. They'll nod along with the P&L math, see that they're barely breaking even, and then say, yeah, but if I charge more and make more profit, I'll just pay more in taxes. That sentence has quietly kept more law firm owners broke than almost anything else. So let's do the simple math. Let's say you raise a flat fee matter by $500. Your direct cost to deliver doesn't change. That extra $500 goes almost entirely to profit. Let's use a combined tax rate of 30% just to keep the numbers round and the math simple. On that extra $500, you're going to pay about $150 in tax. You keep about $350 in your pocket. If you think about it, you're still $350 richer than if you had never raised the price. And that's the whole game. Would you trade $150 to keep $350 every time you signed up a new client? Of course you would. That's what profitable pricing is. So here's the mental flip. More profit does not go to taxes. A slice goes to taxes. The rest goes to you and your firm. If your reaction to every price discussion is, but taxes, what you're really saying is, I'd rather make less so I can avoid writing a bigger check, which is basically choosing to stay smaller so you don't have to look at a bigger number on a form and in your bank account. The bigger number won't be in your bank account. All right. 2 quick rules to price like an adult and still sleep at night. Let the P&L set your price, not the tax bill. First, make sure the work is actually profitable at the firm level. Then talk with your CPA about planning around higher profit, not shrinking it. Plan for taxes off the top. When you do raise a fee and profit goes up, automate the tax paying. Move a set percentage of every collected dollar into a separate tax account. That way, higher profit just means bigger transfers and a bigger after-tax pile left in operating and owner pay. So yes, higher prices do mean more taxes. They also mean a lot more money left over after taxes, which is the only number that matters. See ya. Real quick, if you're a law firm owner doing between $300K and $1 million a year and you're not confident your books and trust account would survive an audit, I'm offering a free trust in books checkup for your firm. We'll review your setup, flag any real risks, and outline a cleanup plan. To book yours, go to bigbirdaccounting.com/checkup.